So, John, do you think the market's just going to keep shooting up like a rocket, or do you think we're getting set up for like a massive judo throw 2008 crash kind of situation?
The more people who doubt that this market rally is for real are ones going, "Hey, how'd you get that nice new RAV4 with leather?" "Oh, made a lot of money in Moderna," And so they're like, FOMO takes over, fear of missing out.
Right.
People see their friends getting rich and they can't stand it, so they eventually throw in the towel of their bearishness and get bullish.
The S&P 500 closed at an all-time high today.
All right. Hi, everyone. Welcome to Money Always Talks. This is a show where we kind of take a step back and look at what money is trying to tell us about ourselves. And today we want to specifically focus on why is the stock market doing so well when everything else is just so awful. I'm Matt, the producer, and we are joined by the resident OG of markets at Forbes, John Dobosz. John, what's going on, man?
Flashing signs over here in Largo, Florida. Thanks for having me on, Matt.
Let's just get right into it. The first question I have is, we're in this time where it feels like the opening kind of text of a dystopian movie. I'm thinking like The Running Man or Blade Runner or something. And, usually in those movies, along with the caveat of everything is terrible, the market is usually one of the things that they mention as being terrible. And yet, even despite everything going on, it's like every day the S&P 500 keeps hitting new highs. Stock market is just out of control in terms of doing well. So I'm just trying to understand, how is that possible? Can you shed any light on that?
All right, you're talking about decades and the overall social themes and flavors that are apparent. Like if you think of the 1930s, what comes to mind?
Just it plummeted. Then you saw people, the bread lines, the lines of work, depression.
Exactly.
Yeah.
Okay, great setup. Okay, market peaks in 1929, falls pretty much unabated with a couple of attempts to recover until 1932. But from 32 until 37, you could have quadrupled your money in stocks while people were queued up for breadlines. So it's not without precedent that you see the market take off in anticipation of something coming down the road.
So then what do you think the things are that the market is looking forward to? Like what's at the end of the tunnel here?
I think there's a big bet on a vaccine coming down the pike. Jerome Powell, the head of the Federal Reserve, said that the Fed is now not going to target 2% inflation, which they haven't been able to achieve. They wanted an inflation rate of 2%, but they couldn't get it over the last 12 years. But they've been doing all kinds of things. You've heard the term quantitative easing, probably, at least ambient.
Ambiently, sure.
Ambiently.
I couldn't tell you what it means, but
what it means is that the Fed has the policy to lower interest rates and to raise interest rates. But quantitative easing means the creation of new money for the purpose of buying government securities. So another reason why is the market going up now? Well, you've got the Fed, which was like after its bad binge in the 2008 to 2013 timeframe. It went from $800 billion to $4.5 trillion on its balance sheet of all these government bonds. And it was in the process of like whittling that back down to something closer to 800. And they stopped and the market freaked out. So now with Corona, hey, the diet's off, man. I'm on vacation again and it's all, fried shrimp and margaritas.
Is it at all, do you think, then a bit of a manufactured optimism in the sense of, like, are they tying it to something tangible that, hey, it's going to go back to normal, we're going to be okay, hence this is why the market's doing okay? Or is it kind of wishing for it, field of dreams, you make it and then it comes? Is it that kind of a situation?
Fake it till you make it is a very, I think they use that term. They do. I mean, the idea to, why does the Fed bother to lower interest rates during recessions? Just to try to stimulate people to borrow more. And that's had the very beneficial effect in the housing market, in the apartment building market, hard assets. Just think, if there's more dollars out there and they're easier to get, the prices of things that people need for the basic sustenance, like food, clothing, and shelter, will go up. Another thing to consider, and this is kind of a big picture, maybe the smart players on Wall Street who are making stocks more expensive are seeing productivity gains during the shutdown.
So, John, do you think the market's just going to keep shooting up like a rocket, or do you think we're getting set up for like a massive judo throw 2008 crash kind of situation.
The more people who doubt that this market rally is for real are ones going, hey, how'd you get that nice new RAV4 with leather? Oh, made a lot of money in Moderna, and so they're like, FOMO takes over, fear of missing out.
Right.
People see their friends getting rich and they can't stand it, so they eventually throw in the towel on their bearishness and get bullish. There's an old adage on Wall Street that says bull markets love to climb a wall of worry. So you've got a recession, 13.5% unemployment, a deadly virus out there.
I was going to ask about the worries because, that's why I'm wearing my investments right now, because a lot of people are obviously buying gold right now and the price keeps going up. Is this also related to the idea that people are just freaking out and don't know what's going to hold? And therefore,
Yeah, I
they're
think a
going to
couple of
what's
things are behind. Gold is a traditional safe haven asset when things look dicey in terms of sovereignty. But for the last 50, well, for the last 75 years, the gold standard has been U.S. government bonds.
And what can we expect from markets going into the fall? I mean, we're still dealing with the pandemic, and we have a massive consequential U.S. election coming up.
Eventually, maybe things will get better, or or the letter wasn't a V, it was a W. Maybe we will get back to the lows. And you know what? October has a horrible reputation in stocks. The 1929 crash that occurred in October of 1987. But October, while it's also a horrible month, often it's usually the month to buy. It's called a bear killer. We'll see what happens.
All right, time for us to wrap this up, but let's rewind to go over what we learned. So why is the stock market doing so well when everything else is just so awful? Well, first, market strength can be tied to expecting something coming ahead. So in our case, it would be a coronavirus vaccine. Second, interest rates remain low, so this makes borrowing money cheap, and the government is also in borrowing mode and practicing quantitative easing. Third, more people see the market is hot, they want a cut of the action, they become more bullish, meaning they think that the market's going up, and so they buy more. And finally, working from home has not really diminished productivity, at least from the market's point of view. Thanks for watching this episode of Money Always Talks. We'll be back soon to figure out what else money is trying to tell us.